Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room. This segment is brought to you by Trading Talk. On this segment, what I would like to do is basically concentrate on the silver market as we take a look at the weekly numbers of the VCPMI automated algorithm and see what it is that we can expect as we come into this week. For this week, the silver market closing above 1643 pretty much has activated a bullish uptrend, and activating the bullish uptrend by closing above the mean here that you see of 1643, which is the average price as we come into this week. It identifies the extreme levels above the mean of the sell one target of 1666 to 1692. If the market comes down below the mean, it's given us an indication that we should be able to find demand or support at the buy one level of 1617 to 1594. In my last report on Seeking Alpha, I talked about silver accomplishing daily, weekly, and monthly targets for those time periods. The average price coming into that week was about 1521, and the fact that the market closed above it indicated a bullish trend momentum. And in that report, I said if silver breaks above 1662.50, which was the previous high made, it would activate the higher levels of the extreme levels above the mean of 1688 to 1747 for last week. The weekly analysis that we do is for the particular time frame. It is difficult to publish the daily reversion to the mean signals because there is a delay of a day to publish on Seeking Alpha. Therefore, we use the weekly and monthly signals. On Thursday, based on the weekly signals, we saw that the low between 1630 and 1634.50 was made. It did not come down quite to that 1622 area that we were looking for coming into last week, but it tested the buy one area of 1642 and reverted right back up to activate a buy signal and close above 1642. At 10:15 a.m. on July 25th, 1642 is the B1 level for that period, for that week. The artificial intelligence of the variable changing price momentum indicator VCPMI, which is written in C++ on the TradeStation platform, tells us that the price has come down to 1642 or below, which was the first level of the extreme level below the mean. And if it closes above it, it's going to activate a buy signal. Buy signal came in last week. From here, it appears that we have activated a buy signal and a close above 1642. In terms of a protective stop, you can use the conservative stop, which is the market closing below 1640 in that vicinity, or 1632 basically, if you want to extend a little more your risk. The target is the average price of 1655 for last week, and a second close above 1655 would have activated a new high, which was the 1668.50 that we saw as the target, and activated the sell one level of 1675 to 1678 for that period. When I mention probabilities, it is not a guarantee that the trade will make money. It identifies the probability based on the supply and the demand. The way you apply the artificial intelligence is up to you as a self-directed trader, depending on your size, goals, and risk tolerance. After working with the VCPMI, it has changed my own standard deviation in my own trading from 50-50 to 50-95, 50-90. So you just need to be disciplined to follow what the algorithm is telling you. Let's see what we can expect next week. As we come into next week, the average price using the VCPMI is 1643. The B1 level is 1617 to 1594. The mean or the average price is 1643. When we update the numbers for the coming week, as of the end of July, we can see that the 1617 area offers a very strong confirmation of support. And it is an area of demand. The area is strongly identified between 1617 and 1594. Once the price confirms and activates the signal, the target is activated above. When the market meets the target for the first time, the VCPMI goes neutral. Then the algorithm waits for the market to activate that trigger by closing above it a second time. The close is the trigger point, which also identifies the target above. The VCPMI is like a GPS for your trading to identify for you the areas where you enter and exit the market. Based on the average price with the two extreme levels above the sell 1 and sell 2 and the levels below B1 and B2, the average price. The sell 1 and B1 levels have a 90% probability, and the sell 2 to B2 level have a 95% probability that the market will revert back to the mean from these levels. Summary. As we come in for next week, since silver closed above the mean, it is bullish. And so it has activated the targets of 1666 to 1692. The mean is 1643. If you're long, use the daily average price as a protective level, or you can also use the weekly average price as a stop or protective level.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.